All right, everybody, welcome back. So today, it wasn't too bad. In the pre-market, we had already talked about the idea that we should not continue to expand more and that we're expecting a sideways week, at least until we get to FOMC. So while we do have a lot of contagion risk with the banks and we still have Bank of Japan like this big threat in the background, this is what we were looking at in the pre-market right before the bell. And I have to say it was a really good setup, and I like this setup as we come into the bell. Whenever we get it, I'm usually pretty excited about it. So this 2-bar reversal gives us a near-term pivot point to focus on, and what I've found more often than not is when we come into the open, what we see price do is make a quick run to try to get through that level. And if it doesn't, that's usually the short trigger. Now, it doesn't always work that way. The way I approach pivot points is I don't expect price to fail at that pivot. But I instead approach it from the idea that if we were going to reverse, that's where it would happen, right? So I know it might sound like a nuanced difference, but there is a difference. Every time price approaches a pivot point, say like down here, we had this deep move to the downside, giving us this double bottom setup. The phrase that I use is, I don't know if it's going to reverse here. I'm not expecting it to reverse here. But if we were going to reverse, that's where it would happen. Now, for double bottoms, I think we've established by now that those are traps. They're designed to be a trap. That's literally their entire existence. That's what it's supposed to do. And so we expect price to go lower than the previous low, just enough to suck in the bears, and then it reverses and crushes them. Here we had a Busby. So we had price at resistance. And then it finally broke out of that resistance and came back to test the old resistance as a new support. And it gave us what it owed, which is back up to the top, which is that 2-bar reversal right there. So that was a nice little Busby play. As we came into the open, we had this tweezer top, and that sets us up for the reversal that I was just talking about. So here we've got a nice tight range. We're really not going anywhere yet. And it's worth noting where price was keeping those lows. Notice all these wicks over here and all of these wicks now, right? So we know it's a significant level. Also notice with that 2-bar reversal, all of these wicks here, that price really failed to get back up there. And it's worth pointing that out because when price leaves somebody behind really fast, if they have a chance to get back out, if they're wrong and they want to get out of that trade, they'll often front run it, right? Because they'll say, well, it's less loss than I would have took, so I'm going to go ahead and get out right there. Think about all the long traders that got in right at the very top. And you know, it happens to everybody. You get in thinking that this next bar is going to be a continuation. It's not. It drops down. You're trapped. Well, a lot of people took the opportunity to get out right before the bell, leaving all those wicks. So we know that there's just a whole lot of situation going on right there. Price runs up into it. Look at the wicks, or better, the lack of wicks as we come up into that zone. It's different now than it was. Then we get to that 2-bar reversal. It's a good place to pause and stop right there. We came up in a 4-bar, almost a 5-bar. Nice little run, 1, 2, 3, 4, and on the 5th bar, right into that resistance, and down it goes. Okay, so I like this setup. I don't have a lot of criteria for it. You know, I've had people say, how soon does that setup have to happen before we open? Can it be 8 o'clock in the morning? Yeah, sure. Can it be, 9:20? Yeah, it's a little close, but yeah. So I don't have too much criteria on it other than from the last leg down, and we begin working our way up, that we set a high, and then we pull back from that high coming into the open, which is this entire setup right there. Okay, that's pretty much the long and the short of it. And I don't want it retested in the Globex 2 or 3 times, right? So I'll move the chart over. Just imagine that this is still Globex. We wouldn't want to see it tested and then tested and then tested and then pull back and then we come into the open. That's not what I want. I want it just like this, a nice little run up, a pull back into the open, a run up again, and that's the end of it. Now, after we got into the open, we're in the RTH at that point. First touch play. All of these over here, not so much. I really don't like those as much. And I think I've made it pretty clear that I like to avoid the first 30 minutes of trading, but that doesn't mean that I never trade in the first 30 minutes. And this is one of those rare occasions where I'm willing to do it. Mostly, I'm willing to do it because I can use a really tight stop. And that is my entire reason for not trading in the first 30 minutes of the day. Most of the time, you can't use a tight stop in the first 30 minutes of the day because you're just going to get taken out. And I'm not willing to put on a big stop just to trade the open, which means I have to sit out because I'm just not willing to compromise. But on this trade, this is one of those rare times where you can trade in the first 30 minutes and you can use a tight stop. I like it. So that's the trade. For me personally, I tend to get in after the rejection. I don't just trade it right on the spot, but your LRE, your low risk entry, is to take it right there. You can put your order on the dome and you can use a 1-point stop and it should work. If it doesn't, you let it take you out. Now, I'm not a big fan of doing that, which is why I go ahead and I wait for the candle to close. But I'm offering it as something for you to think about, right? Putting your order on the dome and then putting your stop on the dome before price has even gotten up there is a risky proposition. Because if price hasn't even got there yet, say we put it on in this situation, we've got our entry there and our stop there, and price is all the way down here. That's very risky because how we approach that is going to give us a lot of information. If the candles are these big, massive candles, I'm much more willing to believe that we're going to reject. But if it's these small, grinding candles, I'm much more concerned that we're going to go right through that level and keep on going. So, it's a dangerous thing to just put your order on the dome at a particular spot and hope that it works, because hope is a really bad trade strategy. I like to see these candles approach that level and how they form, how they open, how they close, how much they move around when they are open. Those tell me a lot about what to expect. If we quote read price and that these candles are the words that we read, we can't jump to the end of the book just because we happen to read the first chapter and assume that we know how the book is going to play out. We need to follow the story through the book and then make a decision about how it's going to end. Well, it's the same thing with price. So your LRE is right there. And you could put it on in advance and just have it waiting. But I think that's a risky proposition. Now, another way to approach it is after price does get there, makes its run up, it tags that level, then you hit the button. Either you market order in or you put your order on the dome, because, you know, with the market being closed now, this looks like a straight shot. Like it came up, it hit it, it fell. But we all know in the real world, that's not what really happened, right? Price ran up there and it actively engaged that level. And then it finally fell away. And in fact, if we were to go into, say, a really small chart time frame, like a 100 tick or something, we could see that level being hit this morning. And we can see it wasn't just a straight shot, right? Price struggled at that level. We could see all these small candles and how it retested. It tried to run back up again. So you could try doing it live. But even then, how do you know that you're not going to slip, right? Because the bid ask was probably pretty wide at that point. You could slip 2 or 3 ticks just trying to get into that thing. Then you're going to need a bigger stop, say around 2 points. So tricky either way you go. I tend to do things consistently, so I like my approach where I just worry about that candle to close. But conviction wise, I think that was one of the best trades today for high conviction. Later on in the morning, we did have this double bottom. And not only was it a double bottom bear trap, but it was also these really, really big tweezer bars. I love those. And then it was a trend line breakover, although I wasn't too excited about adding that to my analysis. It was more, that's where I got half my trade off after getting in. That was my main price target, but I was able to catch a little bit of a fade. Most of my trade was done before we crossed 63. And I gave nearly all of the last of it back because I think I got out with my last one also right there. You know, bad timing on my part, but that's where I took my exit on the last contract. Sure would have liked to have gotten out a lot higher, right? They talk about you can't hit highs and lows. I can on an exit, apparently. You know, that would have been a good high to catch, but I didn't. Still, this double bottom down here, classic double bottom. I honestly expected it to go a little bit deeper, so I was surprised at how shallow it was, which made me a little bit nervous until I seen that thing running all the way back up. My entry was on candle open, right after candle close, and my target was right there. Again, pretty high conviction in that trade. I was nervous about this shallow double bottom until I seen the size of that big green candle close. So for a sideways day, today did offer some opportunities, right? Then we had the breakout failure. So at this point, it would have been the normal mantra that I give, where I say if we haven't broke out by 10 a.m., then we're probably not going to until after lunch. We had the breakout right at 10 o'clock, which made me believe that we were actually going to get something out of it. And we had a Busby with that 10 o'clock breakout. So this was one of the losers for me today. That Busby right there. It was the 10 a.m. breakout, the nice rollover. This looked primed, perfect Busby, and a good long right there, but nope, took me out. It did get that long later on, but you know, not where we were expecting it. The VWAP bounce, I didn't even catch this. I had something going on at that time of day, and so I wasn't sitting here to trade it. but what an amazing opportunity. If we left the others behind, right, all of these back here, maybe the first 30 minutes wasn't to your flavor, the breakout double top at 10:30, maybe none of those, right? Maybe if you didn't like any of those, this was a really good double bottom play off of this pivot right there. So not only did we have our pivot here and our double bottom, but it was also right on VWAP. That's awesome. I didn't get it, but that's great. That would have been a great opportunity. One of the things that I noticed was this collection of price when I was looking back at what I had missed, because obviously, how does it go? You wait around all day for the move, and as soon as you turn and go to look at something else, the move happens without you. So I was looking back at what I had missed, and this double bottom with the bounce off of VWAP and the tweezer bottom too, right? Those three things make that a really good play off the lows. I think, even though I didn't get to trade it, that would have been probably the best trade of the day. I don't know if there's another one that is better than that today. So when it comes to reversals, since we were expecting reversals all day today, these reversal opportunities just kept on going all day long with little tricks like this where it failed to get up to those same highs and then overshoot tweezer tops and tweezer bottoms, like this example right there. It happened again and again all day long. And while it would have been a little rough if you were playing it really tight, this was a good day for reversals. It's the kind of day that reversal traders like, right? It wasn't too wild today. I don't know if it's just me or if anybody else kind of feels like today the flow was just a little less volatile than it had been recently. It could just be in my head. Maybe getting past that bank situation from last week makes me feel like it's a little calmer out there, less volatile. Now we have every expectation of tomorrow being very similar to today, right? Because everybody's waiting on that FOMC announcement. So the expectation is that we'll continue to hold the range, and it's the same range that I offered up in the pre-market, about 75 points from 4,000 down to around, well, let's get 100 points from 39 to 40. I think that's a realistic expectation. If we break that range, then we'll focus on the rest of this range. That's our FOMC goal right there. Now, granted, that's really wide. So if we can, break that down like I do in the morning briefings, that'd be a lot better. Still, we don't have any expectations of anything more than this. So if today offered you the kind of opportunities that you liked, you should see it again tomorrow. I don't think we're going to get a day that looks like this Thursday move until at least next Thursday, because we won't get one on Wednesday, right? Wednesday is going to be the most ranged out of all of these, at least until 2 o'clock. Then things might get a little wild. So that was the trades for today. If you had a different one that you liked more, by all means, mention it in the comments. I would love to see what you think is better than that that VWAP bounce today, because that was a phenomenal opportunity. I'm still a little sore that I missed it. I'll see y'all tomorrow, guys.